Hey everyone, I wanted to go ahead and take a look at the SPY as we head into this week's trading session and talk about Friday's action a little bit. I said the range last week would be in the 208s to 210s, and we poked above the back into the 211 area, didn't make a higher high off of this candle, and a little bit concerned that it closed again below this resistance line. Definitely Monday, I would like to see this thing close above the resistance line here, and hopefully we can get a big move above this candle's high. So we don't want to have too many days here. Like I said, on a big move within 3 or 4 days, you got to make a new high off of this candle. And so that's something that I'll be looking for. And if that happens Monday, I'll feel a lot better about the week going forward. That we'll have a positive week. Um, on Thursday's video, I did say that above 210, we could take a short on the SPY, and let's take a look at that. On Friday, had a message here thinking to short SPY at 10:17 a.m. So around here was 10:20ish, and so I did buy some long puts here at 210 long puts, and timing was correct, but it's a challenge of an option buyer is to get the strike right and the timing right. Otherwise, you lose. And we didn't close at 210. We closed at 243, so those puts were worthless. I got the timing right, but the wrong option. So that's the challenge of being an option buyer is being correct and being uh, within the right time frame. And that's the advantage of an option seller is you don't have to be right and you have time on your side. So that was the quick short trade. If you had shorted the stock, you could have, or the ETF, you could have made something like 50 cents, 70 cents off of the high here. So let's go ahead and take a look at the possible trading range. I've got here the option chain for the SPY, and we're at this area right now, 210 fives. We have a big set of calls here at 24,000. We've got another bigger set of calls at 211 and 213. We're already past 210, and so we'll have some resistance getting into 211, and 213 will probably be the upper limit for this week. Not sure how 211 will be played out. On the put side, we have 206s, which are almost worthless, so these levels will probably won't hold. This level will hold here, 206. 208s have about 15,000, and 210s will have 11,000 puts there. But based on this volume histogram, I would say we get into the 212 areas here and then pull back possibly to 211 to kind of wipe these out. Otherwise, I think we'll definitely close at 213 for this week. So that'll be a good week move for the week if we can do that. That'll mean we will be taking out this high here at what is this? 212.24. So closing above this at the end of this week would continue the bullish sentiment. I'll be watching carefully here on the hourly and possibly the minute when we get into this area. Don't want to see anything that resembles a double top type of sell-off here. We still have our ultra bearish signal with the divergent stochastics. So we don't, if we can break this high, make a new high, and then have the stochastic hump go higher, that'll invalidate that signal. But that signal will still remain. The close below this support, this resistance line is a concern because we got the head, left shoulder, and if it heads down, this would be the right shoulder, and that would be a bearish signal. But other than that, I would maintain my bullish sentiment. We were up on big volume. So I got a message over the weekend that one of the chat group members was checking out the monthly the monthly trend lines, the monthly moving averages on the SPY, and he said that because these trend lines are so far apart, that we should continue the bull move because they're not crossing yet. So that caught my interest. I've never observed that before, so I said, why not? Let's go take a look at the charts and ask that question: is how far apart do these lines need to get before we start seeing a pullback? As this thing gets further away from the 10, it can get quite extended. So the question is, how far do they get apart before we can see a pullback? So this is the monthly chart of the SPY, and there's not going to be a lot of data points because month is a really large time frame. But looking at here, I measured out the current 10-day moving average, or the 10-month moving average, with the 50-month moving average, and the distance between them is about 20%. So I went back and looked at where the 10-month crossed with the 50-month, which right here, for example, and I wanted to see how far at its peak before it started downtrending towards the 50. And here, if we measured this out, we are at about 14%. And then another data point is here, where we had a cross here, and this would be the peak max distance, and we're looking at a 21%. So just it's only 3 data points, so it's really hard to call this a scientific study. But if we take this as a reference, 21%, and then we had a big pullback, I say we are in dangerous territory. Not that the sky is falling, not that the market is crashing, but this is in a similar range as this, would be a cause for concern. And another thing, we had double top here, and we broke out of this resistance on the monthly chart here in 2013. And what I've said before is, whenever we get a break of a trend line, what's going to happen? We got to retest it. Not every time, but happens enough that it's a behavior that can be expected. So we have here a nice rally up, a breakout on the monthly, and eventually, maybe not now, maybe not this year, but soon, eventually, we'll have a retest of this line here. So the 50-month moving average is pretty darn close to where the line is right now. So if we had a pullback here, it would be a nice retest of this line. Not saying that it's going to do it today. I want to be clear. My sentiment in the near term, at least on this week's time frame, is continue to be bullish until I see something that shows me, a bearish indication. But just food for thought. I think that message I got made me curious what the relationship is between these two moving averages. How far can they get apart before they pull back? And so just something to think about. And we can look at it at different time frames on the weekly. I did that before the video, and on the weekly, the 10 and the 50 usually go to 6 to 7% apart before they pull back together. Again, not a very scientific study, just checking a few data points. But hey, anything that can give you a signal, it's worth studying and giving you an edge technical wise. So that's it for the video. If you like the video and you want to keep updated with the technical analysis that I do, please click on the subscribe button below the video, and you'll get notified when new videos come out. So I appreciate your time listening, and have a good week trading. Thank you.